Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. I think this is the only way the EV industry can go. All EVs will increase in price. We're seeing it already. Tesla are continually raising the prices of all their vehicles in all their markets. Yes, because there is so much demand for Teslas, but also there's a growing demand for EVs in general. Legacy Auto's EVs seem to be highly popular too. The thing is, Legacy Auto decided to set their price points relative to Tesla's were about a year ago, whereas Tesla has a somewhat dynamic pricing structure, which they seem to be getting away with. Not too many dissatisfied customers. But the auto consumers want electric, plain and simple. They want electric over ICE, and there are enough of them willing to pay extra for electric. Consumers are understanding that electric costs a lot less to run. Electric also holds its price better. When looking at the actual cost of ownership over around 5 years, then although the initial cost of electric possibly being higher than the equivalent ICE, consumers are still willing to spend that extra, as in the long run, the cost may end up being cheaper, and they simply want electric anyway. It really does appear that some consumers are willing to buy Legacy Auto's EVs. They are brand loyal and even want to stay with the likes of Toyota, despite Tesla being an available option. Anyway, there's a lot more of these consumers than there are Legacy EVs. Legacy initially came in at Tesla's price points equivalent to just show that anything Tesla could do, they could also do. But obviously, as we know, these cars are not profitable for Legacy Auto. But if they raise their prices, like Tesla have, then that might make some difference. Legacy Autos have the demand, they are also supply constrained. Therefore, they can actually raise their prices a reasonable amount, not to mention a lot of them will have their own battery factories before long. Now, I don't believe their battery fabs they're building with partnerships with real battery companies will actually get their cost of batteries down to around $100 a kilowatt hour like they claim, but it will reduce their cost a reasonable amount, assuming the raw materials don't increase in price too much. I think Legacy are paying in the region of about $250 per kilowatt hour currently. If they can get down to Tesla's 2170 price, then that's about $150. If they're using 70 kilowatt hour batteries in each vehicle, then that saves them $7,000. Now, if they also raise their prices about $5,000 too, then that's an additional $12,000 gross profit. I believe that this will not only be enough to break even, they may also end up with a profit. Add to that some economies of scale when they hit volume production. Oh right, volume production, that old chestnut. Yeah, maybe they won't hit volume production, but perhaps they'll just make more lines instead that will make more vehicles, and there will be still some economies of scale. Perhaps they're able to generate a net profit of $4,000 a vehicle. Yep, maybe Legacy could make it in the EV industry. I mean, of course, they will need to use Tesla's charging network in FSD, or else they would inevitably become superfluous. But say they did that, then they are a real EV player. And if they're able to sell 2 million vehicles a year, then that becomes $8 billion net profit a year. You could probably give the EV business a P ratio of 32, giving them a valuation of $240 billion. Bear in mind, this would only be the legacy brands that actually do survive the transition. For example, it's much more justified for Mercedes to offer expensive EVs than Hyundai. Of course, in the meantime, their cash cow becomes a milking cow, milking all the EV profits, rather than supporting the EV business. This is a really tough pivot for them. Also, the fact there'll be several years without dividend payments, which the shareholders may not like, but they have the potential to create a company with a lot more value. All Legacy Autos should be chomping at the bit that they now have this opportunity to perhaps double their valuation of the companies. But if all the other Legacy Autos raise their prices, and Tesla too, then won't that leave the market open to the Chinese EVs? Meaning they can simply undercut the market? For some markets, quite possibly yes. But these are huge industries, and the nations these companies belong to, well, they want them to thrive and not have external threats. Protectionism will likely be used in the EU, US, UK, and Japan, meaning the Chinese EVs will also cost more too. But the Chinese EVs will likely raise their prices as well, because presumably they're also seeing growing demand. No Chinese BEV business make any net profit yet, but if they were able to raise their prices too, and the market accepted that, then it won't take much of a raise for them to also become profitable, not to mention eventual costs coming down further. But the Chinese do have relatively high OPEX, well, so does Rivian, and probably Legacy Autos too, which means they do have to hit a higher gross margin than Tesla did in order to break even. But if the Chinese could get a net profit of $2,000 a vehicle too, then that is still good, especially if you're hitting around 1 million vehicles a year. Perhaps all the BEVs are going to be under $4,000 net profit per vehicle, whilst Tesla come in at more like $10,000 per vehicle. Oh, and then another $5,000 on software. Yeah, Tesla's a really good company. Anyway, my point is that if these other BEV companies are going to make it, then it looks like they will inevitably have to raise their prices by 10 to 20%, but that will give them a huge boost in profits. And it also looks like the market might be willing just to pay that much more for these EVs too. I mean, is it that surprising? Initially, yes, EVs did need to prove themselves as a product to the market. Consumers were skeptical, unsure. The product had not validated itself enough to consumers yet, and the market still not even close to all consumers understanding what they're capable of. Years ago, we used to hear this magic number. If EVs are to survive, they need to get their cost of the battery down to $100 per kilowatt hour. Then they'll be at parity with ICE cars. Now, there are actually some LFP batteries that are under $100 a kilowatt hour, but there is more to this $100 number than people think. They're talking about the cost of the battery pack relative to the cost of an engine. But the difference between a battery and engine is that the same size battery can be adjusted to offer more power to match the equivalent of the ICE car at the same price. This in turn does affect range. So it really comes down to how much range will most drivers be able to cope with. And we can look into years ahead for this too, when there are plenty of charging stations around and charging speeds have perhaps increased and range is not as big a deal. These LFP batteries at this price point do not offer as much range. You're generally looking at the low 200 miles of range. In reality, we kind of compare ICE range to EV range and expect to get perhaps 250 to 300 miles of range on our EVs, as that is a similar range as to what you would get on an ICE gas tank. When your tank is getting low on fuel, then you need to go to a gas station. The longer range on your ICE car simply means there are fewer times you have to bother filling up. This is not the same reason you want longer range on an EV. If you have your own charger at home, then you simply plug it in at home. The longer range is only necessary for when you actually want to do long distance driving. And for the majority of people, probably 99% of drives they do are perhaps under 50 miles. The only reason you require a longer range EV is if you want to go on a longer drive. This then runs into the gas station scenario. It means that you will have to stop at a charger more often on a longer drive. And here is where the ICE advantage lies. You can fill up your gas car in just a few minutes, whereas fast charging may take 15 minutes or so. But the thing is, when you fill up at the gas station, the vast majority of the time is just with your regular day-to-day driving. On the way to work or on the way home from work, you have to stop at the gas station. Just to interject quickly, I just wanted to say how glad I am that I don't have to stop at gas stations anymore. The thought of it sounds like such a hassle. Right, so the difference is when you need to charge your EV, it's likely on a long distance drive. Well, on a long distance drive, you could also probably do with a break and a rest after driving perhaps 250 miles or so on the drive. That's likely at least 4 hours non-stop driving. Yes, it may take almost 5 times longer to re-energize your EV over an ICE car, but if you needed a break anyway, then that's perhaps 10 minutes, or even half an hour if you want to stop for something to eat. And of course, this 15-minute charging time is only going to reduce eventually too. Also, this $100 kilowatt hour figure, well, this is like for like. You buy an ICE car for e.g. $40,000, or the equivalent electric car for $40,000. But then bear in mind, over the next 5 years cost of ownership, well, there could be perhaps as much as another $10,000 in savings on fuel and servicing. This was not factored in. An EV is more valuable than an ICE car, everything else being equal. And in addition to that, people are willing to pay extra just to have their vehicle electric anyway. It comes with all sorts of other benefits that people are now discovering. Consumers see value in these benefits. Tesla's prices are rising. Some people attribute this to inflation and others to demand, as if these demand issues are only temporary. But what if it simply means that the market clearing price of where supply meets demand just happens to be a lot higher than we initially thought, now that the market is starting to catch up and understand EVs. But we still only have a very relatively small EV market size. What is going to happen when the majority of the new car market wake up to the fact they have to buy electric? And on top of that, not only do consumers start seeing and understanding more of the benefits to electric, but then we start seeing more downsides to ICE. ICE prices will likely rise due to losses in economies of scale of less manufacturing, gas prices rising, and fewer gas stations even available, whilst at the opposite end, there are more chargers opening up at faster charging speeds, more convenient locations. I mean, a lot of the thought is that Tesla will eventually reduce their prices and undercut the competition due to the fact that Tesla can produce their vehicles at such low cost, and they plan on selling so many to the mass market. But if everyone is simply willing to spend more on a vehicle because it's electric and doesn't require servicing or fuel, and that can easily offset the extra expense, let alone potential depreciation, which could get even worse for ICE vehicles, then just because Tesla can make lower cost vehicles, will they ever really reduce their prices? The narrative is perhaps somewhat an expectation that EVs will become cheaper than ICE, somewhat perpetuated by the magical $100 kilowatt-hour battery price that means EVs will be at parity with ICE at that stage, then working under the assumption that when battery prices drop lower, then perhaps EV prices will also drop lower. But perhaps EVs can remain more expensive than ICE. Well, I say remain, but Teslas already are lower cost, like for like, than ICE. This would also mean that other entrants to the market can compete, if, rather than the movement on price points decrease, it actually increases. Bear in mind, for legacy autos, they and car dealers are not receiving the extra income from servicing and parts. Therefore, just because an EV can be made for less than the equivalent ICE vehicle, that doesn't mean it should be sold for less, particularly if there is a huge part of the legacy business that no longer exists, that provided significant income. This will need to change to making a profit on the initial sale of the car, and then offering subscription services to get ongoing income. Except, of course, the major one is FSD, which will be tough for legacy to offer. I think it's possible that Tesla may not lower their prices. They may even continue to rise prices slightly. Wow, can you imagine what the profit margins could reach if that happened? But Tesla will simply offer lower cost versions like the Compact or standard Model Ys. I just love the fact I own shares in this company. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.